Good morning. Welcome back on The Pursuit of Wealth. It's Rod with Power Group. Today is Tuesday, April 13th. And in today's video, we're going to be discussing Organigram's Q2 revenue sliding 24% sequentially to 14.6 million. That is bad. And we're going to look at the chart and what we can expect today. We'll review these results, but we'll go through this fairly quickly today, as I did do a video yesterday on this as well and looked at the charts already. So before we jump in, make sure to smash the like and subscribe to the channel. But this is, oh man, this is not good. Let me know in the comments below if you expected this. This is not what we want to see at all. So if we look at their revenue, it came in at 14.6 million. We were expecting, and this is Canadian, we were expecting 20.12 million. That is a big miss. And they also posted negative EBITDA after posting positive EBITDA last quarter, and a net loss of 66.3 million. And a couple people in our group were speculating on it, but these results are very, very bad. When you compare Q2 2021 versus Q2 of last year, net revenue is negative 37%. Just for some comparisons, Hexo growth over the previous year was 94%, and cost of sales plus 97%, double. Oh man, this is not good. This is not good at all. So negative 20 on the EPS. We were expecting negative 0.045. So just taking a look here at TradingView, negative 20. So confirming that number. Shout out to Patrick in our group who did that conversion for us. Fully diluted would be negative 66.4 million divided by 324.8 million equals negative 0.20 on EPS. And common shares would be negative 0.22. So this is not good. This is not what investors want to see after APHA's bomb earnings that just shook the market yesterday. I'm not going to go over this whole thing. I just summarized everything for you. But cash and short-term investments as of February 28th looks like 71 million. But British American Tobacco just took a position in Organigram. Let's see if they can potentially change the course that this company is on. But this is not good at all for the space. And just to kind of give you some perspective, these are some Cron numbers, right? Like Cron barely posts any revenue, and it's pretty crazy because a lot of people consider Cron and OGI as, one of the tier ones. I have no idea why. I would consider tier one anything over 25 million a quarter in revenue, and 14 million for OGI. Look at Cron's last revenue, 13 million. And then when I hear people talk about Hexo, they consider it a tier 2 company. So where's the logic in that? That just doesn't make any sense. So if we go here to Hexo's financials, I clicked the wrong button there, but let's just go to their earnings for the last quarter and look at their core, 32 million. It's only been increasing, right? Just increasingly getting better and better and better. And now they have the Zenabis acquisition. This is a little bit of a joke, guys. I feel bad for anybody who has a substantial holding in Organigram or Cron. Believe me, I wish it were different. But we got to look at the numbers and be real with ourselves. So again, you can check out that entire article. But summarizing, they missed on revenue. They missed big on EPS. They had negative EBITDA. They posted a $66 million loss. That is just really, really, really bad. The only thing that isn't really, really, really bad is we haven't lost weekly support yet at 238. And I mentioned yesterday that Tilray and all these other names were potentially risking weekly downtrends. And I said Tilray already lost weekly support here at 1823, and we've already confirmed a weekly downtrend. A lot of people are asking if they should buy the dip on APHA, and I said I'm not, because Tilray and APHA are like, attached at the hip. And Tilray was already confirming a weekly downtrend. APHA held support yesterday, but look at what we're doing right now pre-market, losing support and confirming a weekly downtrend. So OGI holding up relatively better than its peers compared to APHA and Tilray, but we're going to be watching 238 like a hawk. And just looking here at the weekly, we lost the 100 weekly moving average, so now we're looking down to the 100-day moving average down at 241. So that and the weekly support level at 238 is going to be absolutely critical to hold. And this is just not good. And just for comparison, let's bring up Hexo. Hexo still has yet to test its weekly support level and still holding EMA 26 as well. So we're going to be watching the weekly support levels on most of these names, but this is just an absolute disappointment for a lot of people out there. And I know a lot of people were looking to Organigram to hopefully offset this bleeding. And what if SPY, the S&P 500, sees daily consolidation today? That could only hurt these, these sectors even more. So the U.S. sector also not getting any love today. So MSOS was down about 0.5% there this morning. So we'll see how we react during regular trading hours. Let me know in the comments below what you think of these results. If you need any help, I know it's quite disappointing. And if there's any way that we can be of assistance, we can't give you legal financial advice because we're not financial advisors. This is for entertainment purposes only, but we can let you know what we would do in your shoes. So best of luck into the trading day today and watch those weekly supports. We'll see you after market close for a daily market recap and an MJ update video.